Let's talk about the interplay between all of these headlines and what's going on in the markets today. For that, we bring in Chris Versace. He is Tematica Research Chief Investment Officer. He's joining us from Washington, D.C. today. So, Chris, we all along for these past few months have talked about this seeming disconnect between the underlying economy and markets. The underlying economy has started to improve, right? We've all seen some of these numbers, mixed as they may be. What about now the seeming disconnect between this uptick in cases, this new uptick in cases in some states, and what's going on in the market?
Well, first, Julie, thanks for having me on. I think it's an interesting question. I say that because on the one hand, the market has rallied, unbelievably hard off its lows as we've started to see the economy reopen. Even at times when we're hearing bankruptcies from companies, particularly smaller retailers emerging. So the question is now, even though we're seeing an uptick in cases, what's really making the market feel a little better about the overall situation? And I think it's two things. I think it's a lot of the economic data that we've gotten that has allowed the Citibank Economic Surprise Index to catapult higher. We have to remember, of course, that a lot of that better than expected data comes on the heels of stimulative measures that have been put in place, both fiscal and monetarily. The second thing, though, is a lot of company commentary over the last 2-3 weeks has been surprisingly upbeat. Companies ranging from McDonald's, Wendy's, to other retailers coming out and saying, you know what, we continue to see month over month improvement. Even TripAdvisor came out this morning and said, you know what, July is going to be better than May. May is better than April. And I think that is helping investors, continue to be forward-looking animals.
Chris, it's Adam. Good to see you. I'm curious, when there was a recent article where I believe your firm wrote that earnings expectations for the S&P 500 moved dramatically lower compared to pre-COVID-19 expectations. So for investors who are trying to look for recovery, whether it's in the news about China buying copper and tin, what do you make of that?
Well, yes, you are correct, Adam. We actually did write that, and it's because S&P 500 earnings have simply cratered compared to where they were at the beginning of the year. And when you take a longer term view, which is the way we tend to think at Tematica, we said, well, let's start to look at 2021, and when you do, you realize that there's less than 1% earnings growth compared to 2019. So it's a very challenging issue for investors. And I think it begs the question you're asking, where do they turn? Where is the growth to be had? And I think there are a number of different areas, and it's really going to be a stock picker's market. So for example, one of the areas that we really like is cybersecurity and data privacy, coming on the heels of the passage of not only GDPR, the CCPA, but also New York's own SHIELD Act. And we also know that coming out of the pandemic, there's been a surge in the number of cyber attacks on businesses, small, medium, and large. And so that's one area. This afternoon, we're going to hear from Apple at their WWDC meeting, and we think that there's going to be some little tidbits there about what their 5G prospects are. And we see that technology continuing to not only unfold and be launched in the back half of this year, but that's going to have a disruptive effect over the next several quarters. So there are pockets of strength. Investors just need to know where to look.
Chris, Rick Newman here. There seems to be a different story between large investable businesses and small businesses. I saw one estimate that said of 8 million businesses in the United States, we could lose nearly 1 million of them, mostly small businesses, by the time this is over. But the stock market doesn't seem to care. Do small businesses simply not matter to the stock market?
Well, I think what matters to the stock market are publicly traded companies. So I think it really depends on how you're defining small businesses. If you're talking small publicly traded ones, then yes, they do matter. If they're small private, retailers, mom and pop restaurants, I don't think that, unfortunately, Wall Street is really thinking about that, but they should, because we know that small businesses are one of the lifebloods of job creation. So that will, without a doubt, have an impact later on. I think, unfortunately, Wall Street is just right here with that notion.
Chris, I want to ask you, go back to about Apple and where you see that company going as far as whether or not it's worthy of investment now, or where you see it going in the future. I know you talked about 5G. They're going to have their big WWDC event. We're looking at the potential for an iPhone delay later this year. Do you see that impacting the stock very much if they do confirm a delay, or do you think because there's so much hype about this so-called super cycle for the 5G phone that it won't impact the stock price very much?
That's a good question. I actually think that if they do announce a formal delay, the stock will probably trade off a little bit, but they're not going to delay the 5G product set at all. So it becomes more of a timing issue. And if there's a dip, I think people who are kind of nipping at the margins on Apple shares probably want to use that to get in, because from here on out, I think it's going to be, I'm not going to say the sky's the limit, but I think the vector of the shares is pretty well known and established as to where it's going to go during that upgrade cycle, which is also going to bode extremely well for their services business. And remember, too, there's probably some other products that are coming on board. We'll learn a little bit more today about that, and we'll learn a lot more of that in the fall when they have their annual debut event.
Chris, where else are you looking for investment ideas right now? And in particular, I'm curious, given what appears to be the outperformance of the so-called Robinhood traders this year, are you actually kind of thinking outside your comfort zone, and maybe you're looking at some of those stocks that could be poised for at least a short-term recovery that seemingly are being bought by those folks?
So Julie, if I hear the question right, I think you're asking, are we adopting more of a short-term trading-like focus in the way we're approaching the market? And the answer to that, to be honest, is no. At Tematica, we always look at the shifting landscapes of economics, demographics, psychographics, technology to identify pronounced multi-year thematic tailwinds. So everything that we're seeing, believe it or not, coming out of the pandemic has actually been rather confirming, not only for our digital infrastructure investing theme, digital lifestyle, but also our cleaner living investing theme. So from our perspective, this has been stepping on the gas for the stocks that we like.
Chris, thanks. It's good to see you. Chris Versace is Tematica Research Chief Investment Officer. Thank you.